Hello, let's talk about reason you shouldn't borrow money to start a business without having other sources of income. It is good to start something. It is good not to stay idle and not having something doing. Business is a good idea in any economic situation. So let's talk about reason you shouldn't borrow money to start a business. But before I start, if you have not subscribed to my channel, please do so. Don't forget to like or comment on the post. Having a business idea is good and welcoming. Sometimes our enthusiasm can drive us into making drastic decisions. At that time, you feel this is just it. You have gotten a very good life-changing idea that will change your life and your financial situation forever, because you have seen past the present. The thought of the benefit, or should I say the interest that will be driven out of that business has overwhelmed you, so you feel that this is just the best idea. Yes, surely it is the best idea, but how are you going to generate the income to start that business? Building a business requires hard work and consistency. Starting off with a loan bypasses all the valuable lessons you need as an entrepreneur to build a long-term successful business. One of the disadvantages of a business loan is that whatever you borrow, you have to be prepared to pay back, generally with added interest if required. If you default on the loan, your business or personal assets may be at risk. The lender can cease to repay the loan or take you to court. So be careful not to be overshadowed with the huge benefits that the business is going to bring to you, and then start thinking about, if you take a loan, how will you pay back? Will the business generate much income for you to be able to repay the loan? Start focusing on how to pay the loan rather than the interest you're going to get out from the business. So before you enter into a loan agreement, you should take a look at the pros and cons of startup business loan to make sure a loan is the right choice for you. It's generally not advisable to heavily rely on loans to start a business, especially without exploring other funding options first. Loans can create a significant financial burden, especially for a startup business with a limited cash flow and revenue, and potentially hinder their growth and stability. It is difficult for a business which is just starting up to start depending on paying loans instead of regenerating more capitals for that business. What you are generating, you are using it to pay loans. It is very difficult because both the interest and the capital will be used to pay that loan. There is a more detailed explanation on loan burdens to start up businesses. Financial burdens and risks. Loan interest and repayment obligations can be substantial, particularly for startup businesses with minimal revenue and cash flow. Startups are vulnerable to defaulting on loans, especially if sales and revenue don't materialize as expected. Startup business takes a long time to be able to create more cash flows in their business. So how will you recover your loan capital with interest demands on a low income in your business? Loans secure against assets like personal property can expose businesses to losing valuable assets if they default. There are different ways of generating capital for your business. Let's talk about the self-funding. By using personal savings and investment to fund a business, provide a solid foundation without immediate repayment pressure. Families and friends can also assist in their little way in this process to help you generate capital for your business. And also we have the crowdfunding. raise funds from a large number of people through online platforms, offering rewards or equity in returns. Let's talk about angel investors. Connect with individual investors who provide capital and mentorship to early stage business. We also have grants and subsidies. Explore government or non-profit grants and subsidize for specific business type of sectors. Another ways of generating capital for a startup business is the VC, that is the venture capital. The venture capital funding can provide substantial capital, but often comes with a share of ownership and board representation. In all that I have said, the best way of generating capital for your businesses is through self-funding, meaning to say that it doesn't put you in pressure of loan payments. You don't strain your business at the first run to pay up for a loan. Thank you for listening. In all that I said, I hope it helped us to look into capital raised through loan fundings in order not to put us in high risks of defaulting and also to keep us out of financial burdens and stress.